Welcome to Megatrade101.com's video support with reference to top strategies on trade with equities and currencies, particularly focused on the Australian dollar, supporting our market view analysis from July 7th to August the 2nd, 2017. In this modified sequence of trade analysis, the Australian dollar may find some resistance at the 77.10 level around this area with a range of 77.50 may find some good support during the corrective sessions here at the 76.03 level. Its wide consolidation from this point to this point may prove to be well in place, but would not discount the possibility that it can break higher above this resistance level when the US dollar fails to follow through. This may prove to be a two-point support, which some others may call close to a double bottom price on a technical basis, where it would indicate a strong up move with a correction. And however, this configuration would show that a possible or the higher probability of a move directing to a higher level for as long as there would be enough volumes and momentum, the prices would continue. However, this is exactly what we're looking at as far as the area of resistance, looking at a technical point of view. And this chart was made on July 7th, 2017, just to prove a point that the market analysis would be as effective only when it comes through with a good move breaking its resistance, which we have been expecting for some time. There are no other technical indicators that we have used, simply looking at price action and the analysis that goes behind the market behavior. Following the chart, July 18, 2017 already shows a breakout from the consolidation, which we had made mention from our last market view analysis dated July 7, with a follow-through price action supported by a weaker US dollar decline. And the price for the Australian dollar, the Aussie dollar, is at 0.7917. And this is in relation with the futures contracts on the Aussie dollar, where we already had been given the first signal coming from this particular bar configuration or candlestick configuration, where a spinning top has been reflected on the way up as it penetrates its resistance. Let me show you what we mean by getting the signal from the futures market as far as the Australian dollar is concerned, and why it is also necessary for us to show that using the futures market or the currency futures would probably give you an indication or even a first signal for a possible price reversal. When we say a price reversal, it does not necessarily mean a trend reversal, although in this indication it does point out to be one, but with an exhaustion level after coming out from its third objective at the level of 0.7917, which is in line with the spot market. You may wonder why we use the futures market in relation with trading the spot foreign exchange. Because there are times the futures market provides a better signal indicator, although not necessarily all the time, but they do provide a good signal of an indication as to where prices would be at in the future, since it's in the futures market. Now let's go back to where it all started. And indeed, we have reserved this for the best part of the analysis. So we have decided to share how all this came about. As we all can see, that there is a 10-bar count that we have used on the indication that the consolidation has had a pattern where it could be identified. From a 10-day period up, a 10-day period down, which is almost in the same level of 500 pips, the same pattern on the way up again, although the down had been stopped by this particular indicator, where a bull signal and a rising channel on the way up has been provided as far as the chart is concerned. Now, counting the 13 bars, or days rather, there has been an indication that a pullback twice had also been reflected, indicating that the possibility of a correction is in the making. With that said, it is time for us to be able to settle and see how the US dollar would unfold in the next few days. But without any hesitations, it would be logical for us to be able to settle or cash in, unless there would be some indication that the prices would still have enough room for an up move. But however, because of the simple logic that the cycle of a 10-day period to a 13-day period more likely would have a correction. So that is why, relative to the market's intention, regardless whether it's going to continue to move up or simply move down on a correction, it would be wiser to be able to get more than 500 pips, and that is what we have been waiting for. We hope that this video presentation would also help you provide and have a glimpse on how trading the foreign exchange market is made. Thank you very much and have a good day.